ONGC, among the top Nifty gainers today, Jefferies has issued a bullish note with a target of 390 rupees, citing policy continuity that could ensure higher profitability going ahead.
Interglobe Aviation falls close to around 3% as deals worth 3,600 crore rupees change hands at around 4,406 rupees a share. The sources say that the Bhatia family unit, Interglobe Enterprises, is likely to be the seller. Hence, the stock is under some pressure.
IRB Infra 2 slips almost 7% as nearly 7% equity worth 2,700 crore rupees changes hands at about 64.5 rupees per share. Sources tell us Sintra is the likely seller.
Honasa Consumer also slides more than 3% after 2% equity worth around 291 crore rupees changes hands at around 439 rupees a share. PE firms Fireside Ventures and Sofina Ventures are likely to be the sellers.
And then you have PSU housing finance and construction stocks, the likes of Hoodco, NBCC surging after the new NDA cabinet expands the affordable housing scheme and approves financial assistance to construct 3 crore houses in urban and rural India.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangla Malu. As we speak, all the top indices that are on the top of the screen trading well in the green. So that's good news, Mangla. 50 points higher on the Nifty, but individual stocks doing a thing of their own.
Absolutely, Nigel. You know, yesterday as well, even as the frontline indices were consolidating, we had the small cap index do a lot better. Portfolios were feeling a lot better. And this morning as well, you know, the Nifty, yes, recovered from the day's low, currently doing well with a 70-point gain. But the mid-cap index, that's where all the action is, up almost 0.75%. And we have the advanced decline. Those charts should come up for you. Nearly 1,800 stocks advancing for about 600 stocks which are declining. So a lot of stocks doing a lot better. So policy continuity, now we have clarity on who gets what portfolios, etc. All these things are out of the way. The street will perhaps now look at what takes place in the US with the Fed meet outcome. But up until then, all cues are veered towards what the budget of this new government will bring about. Until then, we will see this market move continue, at least as far as the broader markets are concerned, consolidating for the frontline indices after a big rally. Good time to get in Shilpa out for a quick technical check on the market as well. Shilpa, last week was a wobbly one. We came out of it victorious for the bulls, and now as well as we speak around that 23,325 mark. Do you think consolidation is the order of the day, or maybe we can see this up move extend?
Good morning, Manglam and Nigel, and thank you for having me on the show. Talking about indices, yes, we see that the up move is slightly trending now, and with the stop loss of 23,200, I believe it's a good level for now to move ahead towards 23,500. The fear that we could have seen some sort of profit booking in the morning is completely ruled out now, and the way it is steady and it is moving up. I mean, all the indices in so much of green. I believe you are good to see 23,500 on Nifty, and likewise Bank Nifty, it should test now 50,500 on immediate basis.
Okay, all right. What about the individual stocks? What are you tracking today, Shilpa?
Since it's been the expiry, I believe the financials basket should do well. And in this, I have recommended HDFC Life today in the morning at Prabhuda Siladhar as well. The futures trading at around 573 Rao. I believe it has a very strong support at around 564 zones. The day low should be kept as its stop loss, and you can look for targets of 590 to 600 from here. The other one would be a buy in Crompton, again recommended same today. It is trading at around 417 right now. It is also giving a breakout, and yesterday also we saw a very sharp up move, and today it is still continuing. So I believe with a stop loss of 410 from here, you can look for targets of 435 to 440 coming in.
Right, Shilpa, would you have a view on GMR Airports? It's been flying all since morning, and now as we speak, it's at the high point of trade. It's not been a small mover by any imagination. In fact, in the last 12 months, it's doubled already. So what do you think chartically explains this sort of move here on GMR Airports, and where is it likely to go?
Mangalam, from here, I believe it should test 94 to 95 zones, and if it sustains that, then you are again in treat for the levels of 107 to 110. But this 94 to 95 zones might be a little hurdle. So if you are long already at the lower levels, you might try to book profit once, or maybe half of your gain should be booked, because that might act as a resistance, very strong one. But above that, if it sustains, then again it's a blind buy towards 107 targets.
Thanks, Shilpa, for joining in and filling us in with all of those details. For the time being, let's shift focus to our special segment where we get you a few ideas of profit from Money Control Pro. Nitin Agarwal joins us to tell us about a stock that he's tracking closely. Nitin, take it away.
The company that I have chosen for today is SGS Enterprises, which is an auto ancillary company. First, let me briefly touch upon its Q4 number. The company recorded a top line growth of around 75% on a YOY basis, driven by its acquisition of WPI. In fact, excluding WPI, the company top line grew by around 33-35%, which is higher than the industry growth of around 22%. Its EBITDA margin also remained about 25%, which is a significant feat for an auto ancillary company. Now, there are a couple of factors that make us upbeat about the company. First, the changing customer preference toward the premium vehicle. The customers are preferring premium bikes, premium cars, which is auguring well for the company like SGS, which is continuously innovating the premium products. These are high value, high margin products for the company, and hence the company has been able to record significant growth in its EBITDA and has been able to record a 25% EBITDA margin. Apart from that, the company has been targeting the export market. Its share of revenue from the exports has grown to around 7.5% in FY24 as compared to 5.5% in FY23, primarily driven by the recovery seen in the international markets. In addition to that, the company has been growing significantly, primarily on the back of its acquisitions. Earlier it acquired Exotech, which had worked very good, and now it has acquired WPI. In terms of valuation, the company is currently trading at around 18.2 times FY26 projected earnings, which we believe is very reasonable for long-term investors.
All right, with that, we'll slip into a short break. Come back on the other side. We have the management of RailTel. CMD Sanjay Kumar joins in to discuss the recent order win and business outlook at large. Stay tuned. Welcome back. You're watching us here on Chartbusters. Some of the stocks which are busting the charts. In fact, when we started the show, the midcap index was up about 0.75%. And now that move has extended a little bit at the high point of trade for all the frontline indices and the broader markets. Bosch is one of the stocks from the broader markets which has moved to the high point of trade. But let's get in our first guest on the show, RailTel, the stock in focus on the back of some order inflows. The company has got a bunch of orders over the last few trading sessions, trading weeks, in fact. They're also eyeing potential revenue of 4,000 to 5,000 crore rupees in 3 years coming in from the implementation of the Kavach safety system. RailTel's Chairman and Managing Director Sanjay Kumar joins in to discuss the company's strategy going ahead. Thanks a lot, sir, for joining in. In the conference call, you had spoken about the potential of 4,000 to 5,000 crores coming in from Kavach. And yesterday we had the continued, or rather the announcement of continuation of Mr. Ashwini Vaishnav as the rail minister. With this continued policy, what is the kind of order inflow that you are targeting this year and the year after that? If you could give us a sense.
So thank you very much for giving this opportunity. We are really very happy because there's a continuity with the kind of coming of our Honorable Minister is guiding us. Whatever guidance and whatever expectations we were having from Kavach and LT kind of projects, so we continue to expect the same. So as you rightly said, that over next 4 to 5 years, we are expecting around 4 to 5,000 crores of Kavach orders for RailTel. If we club together LT and Kavach, so then yes, 10 to 12,000 crores of orders we are expecting from Kavach, put together with the LTE. So that is the scenario over next 4 to 5 years. If we talk of this year, we expect, see, there are 2 tenders already floated by the by 2 railways, and we are preparing ourselves to bid our best offer and expect to win maybe some of these orders. I would say that we have other than this Kavach and LT, we are also participating in other signaling tenders, which I told many times earlier also, that there is a roadmap of around 1 lakh crore of signaling works, including Kavach and LT, 1 lakh crore signaling works, modernization works, which are likely to be implemented by railways over next 4 to 5 years. So we expect a good amount of works over next 4 to 5 years. Say, I can say 16 to 17%, 18% of the total outlay for next 4 to 5 years. This year, I can say we should get around, we target to get around 1,000 crore of orders from railway works if the tenders are finalized in time, and we hope so. See, 1 quarter is already passed or is about to pass, so we expect a good order book this year from railways.
All right. Hi, Mr. Kumar, and good to hear the tone in your voice as well. You're sounding very, very optimistic about the future and the prospects of the company, so your investors will be quite happy. Let's focus a little bit on execution. What is the current order book? The last count that we have is around 4,700 crores is your order book. Could you give us an updated number? And what is the execution plan for this year?
So we are around standing at around 4,600 crores of order book in our hand on date. And out of this, we are expecting around 40% of this 1,800 to 1,900 crores of orders we are likely to convert into revenue this year.
All right. So revenue this year will be 1,900 crores, is it?
From projects, from these current order book, yes.
Okay. So this, and what is the absolute revenue, the total revenue that's telecom as well as project work services put it together? What will that revenue number look like? And give us the split also.
I believe that we should be growing by around 30+% this year also, and we should be somewhere around 3,400 to 3,500 crores of revenue by the end of this quarter year. This is what we are expecting, we are targeting as well.
All right. And the split will be 1,900 crores will be projects?
You can say 40 to 60. See, 40% from telecom roughly, and 60% from project business. This is what I can say this time, yeah.
You know, the concern that the street had was the margins in the project business. In the 4th quarter were at 2.4%, but you explained that those were because of some one-off factors. So what is the kind of sustainable margins that you can look at in your projects business in this year? Is 6 to 7% likely? And overall, what are the kind of margins that you're expecting on a 3,500 crore revenue base?
Yes, I think I've been telling this earlier also. See, quarter for a RailTel kind of small company, a quarter is a small period. So yes, Q4 little bit could be seen by the market as a maybe as a poor performance. But overall, we performed very well and we were satisfied by our performance. And if we talk of this current financial year, so I can say that we will continue to maintain the 5 to 6% at least margin from project business. And overall, EBITDA margin, I expect to be in the range of 16 to 17% at least. EBIT, if we talk of, then EBIT, of course, there will be pressure on EBIT as well. So we should be around 11 to 12% of EBIT margin this year. But we are focusing on growth. We are focusing to grow even at higher rate than the current growth rate as well. So our focus is on absolute growth, not in the percentage growth alone, because our numbers are small, so that growth may not be the correct indicator in terms of percentage.
Okay, the other aspect the street looks at is what is the export opportunity? So as a percentage of your business, what is it? And where do you see that number headed? You know, Mr. Kumar, as you speak to us about these numbers, growth of 30%, margins holding at around 16-17%, order inflow of around 1,000 crores, the stock has actually moved to the high point of the day. So the railway stocks are in focus. And just to give our viewers an update as well, the stock price moves higher. Please go ahead, sir, and tell us about this export opportunity.
The international market, we have started working groundwork, and it's going to take some time. But we are very much hopeful that we will certainly work in international market in future years. But I'm not very much hopeful this year. We may get few orders here or there, but I would say that that is something substantial about international market for this year.
Okay.
At least.
For this year, but in the time to come, you must be having a projection, right? International business as a percentage of your total mix could scale to what levels?
So, as I told you, we are working, we are doing our homework, and at this point of time, it will be difficult for me to bring some projections. We are working in few South African countries, East African countries as well, Southeast Asian countries also. We are also working in some Middle East, but those are even in the neighborhood of our country like Sri Lanka, Nepal, and Bhutan. But I cannot give any estimate right now. This is a new area for RailTel, so we are cautiously working in this because international market is not very, I would say, encouraging at the moment. But these developing countries, we see the opportunity, and we hope to do a good performance in future years. Yeah.
Would you have a vision that, say by 2030, X amount of my revenue should come in from outside of India? Because the tripartite MOU that you've signed with Innovitel and Seco Africa Energy, that makes your first venture into Africa. And now that you're talking about Nepal, Bhutan, all of that, you're laying the groundwork. But, we're not talking about this year, next 3 years. That's uncertain. 4 years, 5 years from now, what's your vision? What proportion of your revenues should come from outside of India?
I can dream of maybe 10% of our revenue coming from international market 4 to 5 years down the line. Yeah.
And edge data center, how much can that be as a size of the business? Because everyone's been talking about these data centers, etc. as well.
Yeah, so as data centers, we have signed agreement with our partner, and the partner is busy in preparing for the installation of these as data centers. So this year we may get some revenue, but next year certainly it should be around maybe 15 to 20 crores of business, 25, 26. This year I'm not, I will not try to give any number.
All right, take that point. Thanks a lot, Mr. Sanjay Kumar, for joining in and giving us the outlook. You're sounding bullish, and the street likes that. Stock at the high point of trade, 4,000 to 5,000 crore worth orders coming from Kavach. If you add LTE to that, that order size actually doubles over the next 4 to 5 years. But more importantly, the near term itself, expect margins of 16 to 17% with 3,500 crores on the revenue front for FY25, appreciating the continuity of Ashwini Vaishnav as the Minister of Rail. So that does well for the industry. All these stocks doing extremely well as well. Take a short break, come back on the other side. We'll get you more stocks which are in the news. Stock-specific action awaited on the other side.
Welcome back. Well, let's focus on a couple of stocks that are bobbing around. Tata Chemicals, that's one stock that's buzzing in trade after a sentiment report indicates that the demand for soda ash is rising and global supply conditions could result in Tata Chemicals raising the prices of soda ash. Sonal joins us to run us through all of those details. Sonal?
Thank you so much for that. Well, Tata Chemicals is in focus because American National Soda Ash Corporation, with effect from 1st July, will be increasing prices of soda ash. And remember, this price increase will come in after months and months of soda ash price cuts that we've seen in the industry as well. And they will be raising the export prices by $25 per metric tons. Now, this is a positive for everyone who is producing soda ash globally and specifically in the US, and that is Tata Chemicals. This is because this is on all non-contract sales of soda ash and on contracted sales when contracts are allowing it as well. The ANSEC president said that they are seeing a tightening of the global soda ash supply environment, leading to an increase in demand for soda ash. Now remember, so far we've been talking about higher supply in soda ash leading to lower prices, but right now there is some change in fundamentals as well. Tata Chemicals withdrew as a member of ANSAC in December 2022, but the indication is if ANSAC is increasing prices, maybe Tata Chemicals will also go ahead and increase prices, especially in the US markets. This is positive for the US natural soda ash prices. They have been under pressure for a number of reasons. There was new Chinese capacity coming in, there was dumping coming in from China, Turkish supplies were increasing, Europe was under a lot of pressure when it comes to demand. So looks like there could be some reversal, and it's an early indication that maybe Tata Chemicals will also go ahead and increase their US soda ash prices, which will bode well for the company.
All right. So after many months of decline in soda ash prices, perhaps prices could increase, and that's the reason why the stock has recovered from the lows. Currently, actually, moving towards the high point of today's trading session with a gain of almost 3%. Home First Finance is the other stock which is also surging following a bullish note that came in by Investec. Abhishek joins in to tell us more about that. Abhishek, 8% higher now.
Well, Investec has written on Home First Finance. They have a buy recommendation with a target price of 1,200 per share. Now, Home First Finance has crossed the AUM of 10,000 crore level, and an ROE of 15% is what Investec has written, with best-in-class asset quality as well. So, focus of annual report 2024 in Home First Finance is the preparation for next leg of growth for the company. So, they have added 3 new states to the existing 6 states that they had. The 6 states that they focused earlier was on Gujarat, Maharashtra, Tamil Nadu, Andhra Pradesh, Telangana as well as Karnataka, and now they have added 3 new states into their AUM, which is Uttar Pradesh as well as MP and Rajasthan. So they believe Home First Finance is the most scalable, affordable HFC, and ROE right now has crossed 18%, should reach about 18% by FY26. So they expect AUM growth of about 29% CAGR between FY24 to 27, and they see 3 catalysts in FY25 which augurs well for Home First Finance. Number 1 being credit rating upgrade due to the AUM size of 10,000 crore plus. The credit rating upgrade is due for the company is what they believe in. Affordable housing scheme from the government has got a push as well. We have seen that with Pradhan Mantri Awas Yojana as well, and additional fee income that they will have from cross-sell of products in their insurance business. Back to you.
All right, Abhishek, thanks a lot for that. So that explains the up move that we're seeing on Home First Finance. On that note, actually, what we'll do is we'll wrap up on this edition of Chartbusters. Thank you so much for watching from Nigel May, the entire team. We leave the markets on a good note, almost 450 points higher for the mid-cap index. And as you can again see at the top of your screen, a big up move is what we're seeing in the broader markets.